When you look at in Pennsylvania, had one of the warmest winters it had in the last 50 years. Yeah. And being a distribution company, the gas company that we do there, we overcame those headwinds and still met the number. And in addition to that, despite the challenges in our regulatory environment, because of our scale, we were continue to able to shift capital around our platform to invest in the things that are most important to our customers. So it was a good day.
All right, my analyst at Bloomberg Intelligence that covers your stock, she writes in, she says, ask him about Illinois. So talk about some regulatory headwinds. It seems like Illinois is in the news, and not always for the right reasons. But anyway, talk to us about doing business in Illinois.
You know, ComEd is the largest utility in Illinois, having the privilege of serving Chicago. And your analyst is right on. Illinois is a difficult jurisdiction for us right now. We had a ruling on December 14th, and that ruling set, I think, their efforts to decarbonize and to move forward on transportation electrification that they were on. But we are committed to working with all of our stakeholders, including the Commission, to get to where we have a shared vision to move Illinois forward. But it was December 14th, I remember it well. It was a tough day. But what you've seen now is we've reduced about $1.4 billion in capital in Illinois. But more importantly,
so because of this decision?
Because of that decision. And
wow.
What really hurts is that the citizens of Illinois, their transition to a clean energy stack is going to slow down. Mm-hmm. And we had to lay off 900 contractors. Yep. That's direct contractors, and impacted by that was roughly 2,000 indirect jobs. Now that's just us. So you can imagine the other utilities, the other electric utilities and gas utilities had to do the exact same thing. But we have a path forward, and we continue to work with the Commission to right-size this.
And obviously, you guys are looking to switch over to clean energy and other markets as well. So how does Illinois maybe give you a bit of a blueprint for how to approach these other markets?
Well, I would tell you that the same day, although there was a bad outcome in Illinois, we had a solid outcome in Maryland. Exact same day. So it just goes to show you, when you have a shared vision of how to get there, we don't expect the commissions to give us everything we're asking for. Mm-hmm. But if we have a shared vision and understand the mutual benefits, you can do it. And I always say in my golf parlance, Maryland, we hit it was a par. It wasn't a birdie, we hit it, and we're working on that. So it is a shared vision across, and each jurisdiction is different, because you can imagine in Illinois, they're saying we're going all electric sooner rather than later. Maryland doing the exact same thing. Pennsylvania, hey, we like our gas. Mm-hmm. We're saying gas is going to be part of that portfolio in Pennsylvania. And it's up to us to understand what those jurisdictions want and determine how to get there with those mutual benefits.
So that's how I was going to ask you. How do we, to the extent that we move this economy to a more greener fashion, including in the energy grid, who drives the bus? Is it you guys saying this is how we're going to invest our capital in our plant, or is it more the municipality saying we want to go this way, we want to stay gas, we want to go green, or is it kind of a, partnership, I guess?
It has to be a partnership. Right. So, by us not owning generation, what I can tell you is we are brought to the table more often than not now, because they don't feel I have a vested interest. By me no longer owning nuclear, wind, or solar, my job is to deliver it to you. So once they understand that and really get it, I'm now a trusted partner. Now, having said that, what I can tell them is that here's the cost to achieve what you're trying to achieve. Give you an example. In Maryland, we had a jurisdiction that wanted to go all electric. And we said, look, I'm electric and gas. I'm going to benefit. I can do that for you sooner rather than later. But this is what it's going to cost the average customer in your city if you do that. And when you put those costs in front of them, they're like, okay, let's slow it down a little bit. Let's be more pragmatic about it. And let's do a balanced approach. And that's what we're finding.
Well, that's what I was going to come to you next about, is that I'm sure a lot of people would, if given the choice, would probably say, yeah, cleaner energy, let's do it. But then what does it cost? And so are you saying then that this is is it markedly more expensive than gas? And is that just because it's a new technology, it's going to take some time? Or even once it's further developed, this is still a more expensive energy alternative?
It will be more, it will be more costly in the short run. Why? Because the infrastructure to handle wind, solar, and increased renewables, you have to build this infrastructure to do that. So that substation that's right around the corner from your home, it's not equipped to handle that amount of load if you were to convert directly to electricity sooner rather than later. So you have to build up that infrastructure. But I do believe technology is going to catch up and balance out the costs. And my responsibility as a CEO is to ensure that this transition is done equitably. Those of us who can afford it, they're not going to miss a beat. But what about those communities that are struggling to pay their bill today? When you start going down this path quicker, they're going to be the ones most impacted.
How do your company, Exelon, do you grow via acquisition? And if so, how do you think about acquisition-related growth?
Yeah, so when you think of Exelon was formed in 2000 with the combination of Commonwealth Edison out of Chicago and PECO out of Philadelphia. So Exelon formed via acquisition. In 2012, we bought Constellation Energy, which was Baltimore Gas and Electric. In 2016, we bought Pepco Holdings, which was Pepco DC, Delmarva, and Atlantic City. So we're a conglomeration. I think the industry will continue to move that way because scale matters when you go to cost and affordability. For us at this point, that is not a priority because we're investing over $35 billion over the next few years. That has to be our priority right now.